Hey everyone, welcome back to Tokenized Living. Traditional investing can be a bit old-fashioned. You know, tying up your money in illiquid assets, dealing with paperwork and middlemen taking their cut. But what if you could invest in high-value assets like real estate or fine art with just a few clicks? That's the power of tokenization. It's like taking a piece of the real world and turning it into a digital asset, making investing more accessible and efficient. Whether you're an experienced investor or just starting out, this video is your guide to understanding this game-changing technology. Alright, let's kick things off with step 1, asset identification and valuation. Tokenization can be applied to a wide range of assets: real estate, fine art, vintage cars, intellectual property, even renewable energy projects. Identify an asset with strong potential for appreciation, then determine its fair market value. Imagine tokenizing a prime piece of real estate worth $1 million. Divide that value into 1 million tokens. Fractional ownership makes high-value assets accessible.
With the exciting world of tokenization comes the serious business of legal and regulatory compliance. This step is all about making sure your tokenization project is squeaky clean from a legal standpoint. The legal landscape for tokenization can be a bit like navigating a maze, with regulations varying depending on your jurisdiction and the type of asset you're tokenizing. This is where having a legal eagle on your team is an absolute must. They'll help you navigate the complexities of securities laws, intellectual property rights, and any other relevant regulations. A good legal expert will also guide you through the process of structuring your token offering in a way that complies with all applicable laws. Legal compliance is like laying a strong foundation for your tokenization project. By addressing compliance head-on, you can focus on unlocking the full potential of your tokenized asset.
Let's dive into the techie side of things with step 3, creation of smart contracts. Think of them as self-executing agreements written in code. They live on the blockchain and automatically enforce transaction rules. Smart contracts are the backbone of tokenization. They define how tokens are issued, transferred, and managed. They remove the need for intermediaries, saving time and money. Stored on the blockchain, they're secure and transparent. Every transaction is recorded and verifiable. With our smart contracts in place, it's time to choose our digital playground, the blockchain platform. There are tons of blockchain platforms out there, each with its own strengths and weaknesses. Ethereum is like the trusty SUV of the blockchain world. It's been around for a while, it's super reliable, and it has a huge community of developers. But like a gas-guzzling SUV, Ethereum can get pricey with transaction fees, especially during peak hours. Then you've got newer players like Solana and Cardano, which boast lightning-fast transaction speeds and lower fees. Don't forget about Binance Smart Chain, which is compatible with the Ethereum Virtual Machine, EVM. Choosing the right blockchain platform is a critical decision that will impact the scalability, security, and cost-effectiveness of your tokenization project. Consult with experts to find the perfect fit.
Now for the moment we've all been waiting for, token creation. This is where we mint digital representations of our asset. Think of this step like printing new dollar bills, each representing a piece of the asset. We can create fungible and non-fungible tokens. Fungible tokens are interchangeable, like dollar bills. NFTs are unique, like one-of-a-kind art. We'll define key characteristics like name, symbol, and total supply. This info is encoded into the token's smart contract. Once minted, tokens are ready for distribution and trading. One of the coolest things about tokenization is the crystal clear ownership record it provides. Tokenization replaces old-school property deeds or stock certificates with a secure, transparent ledger on the blockchain. Every single transaction involving our tokenized asset is recorded on the blockchain, creating an immutable history of ownership. This level of transparency is a game changer for both asset owners and investors. It helps build trust, eliminates disputes, and makes it incredibly difficult for fraudsters to mess around with the system. Imagine being able to trace the ownership of a piece of art back to its original creator, or track the entire transaction history of a property with just a few clicks. That's the power of blockchain-based ownership records.
Now, when it comes to tokenizing real-world assets, we need a safe and secure place to store them. That's where custody solutions come in. For physical assets like real estate or art, we need to consider things like secure storage facilities, insurance, and environmental controls. This is where partnering with a reputable custodian comes in handy. They specialize in keeping assets safe and sound, giving investors peace of mind. On the digital side, we need to ensure the security of our tokens. This involves choosing a secure wallet to store our private keys, which are like the passwords to our digital assets. There are different types of custody solutions available, ranging from traditional custodial services to more decentralized options. Choosing the right custody solution is crucial for maintaining the integrity and security of your tokenized asset.
Okay, so we've got our tokens, they're secure, and ownership is crystal clear. Now what? It's time to let them loose in the wild world of exchanges and marketplaces. This is where buyers and sellers come together to trade those tokenized assets. Think of it like the New York Stock Exchange, but for tokenized real estate, art, or whatever you've digitized. Investors can buy and sell their tokens 24/7, just like trading stocks or cryptocurrencies. There are two main types of exchanges: centralized and decentralized. Centralized exchanges act as intermediaries, facilitating trades and providing a level of security and liquidity. Decentralized exchanges cut out the middleman, allowing for peer-to-peer trading directly on the blockchain.
All right, it's showtime. With our tokens listed on exchanges, it's time to welcome investor participation. This is where your tokenized asset goes from a cool idea to a tangible investment opportunity. Investors can now buy your tokens, becoming fractional owners of the underlying asset. They can diversify their portfolios with a new asset class, potentially benefiting from asset appreciation and any dividends or rental income generated. Tokenization allows asset owners to unlock liquidity from previously illiquid assets. Need to raise capital for a new project? Instead of selling your entire asset, you can tokenize a portion and sell those tokens to investors. This fractional ownership model democratizes access to investments that were once only accessible to the ultra-wealthy. Highlight its growth potential, any passive income opportunities, and the benefits of blockchain-based ownership.
Now let's talk about one of the most significant advantages of tokenization: trading and liquidity. With tokens, trading is as easy as clicking a button. Transactions are settled quickly and efficiently on the blockchain, often with lower fees than traditional methods. And because tokenized assets can be traded 24/7 on global exchanges, you're not limited by geographical boundaries or traditional market hours. This opens up a world of opportunities for investors looking to diversify their portfolios and access new markets. While tokenization makes it easier to buy and sell assets, the overall liquidity of a particular tokenized asset depends on market demand. It's essential to choose assets with strong fundamentals and a solid track record to attract investors and ensure healthy trading volume. Just because we've successfully tokenized our asset doesn't mean we can kick back and relax. Ongoing management and governance are crucial for maintaining value and keeping those investors happy. For physical assets, this involves all the usual suspects: property management, maintenance, insurance, and ensuring compliance with local regulations. The key is to have a solid plan in place and a reliable team to handle the day-to-day operations. On the digital side, it's all about transparency and communication. Keep investors informed about the asset's performance, any relevant market trends, and any decisions that might affect the value of their tokens. We can use smart contracts to automate certain governance processes, like voting on key decisions or distributing dividends. A well-managed and governed tokenized asset builds trust, increases confidence, and ultimately contributes to the long-term success of your project. So there you have it, a step-by-step guide to navigating the exciting world of tokenization. From identifying the perfect asset to managing it effectively, we've covered it all. Tokenization isn't just a buzzword, It's a fundamental shift in how we think about ownership and investment. It's about breaking down barriers, creating opportunities, and democratizing access to wealth-building assets. As the digital economy continues to evolve, tokenization is poised to become even more prevalent, transforming industries and empowering individuals around the globe. Please like and subscribe.